Well, the question is, how much of a gain are we going to be able to hold into the close of the day? Well, right now, we've got that nearby corn contract of September up 5 cents at 361.5. December up 5 at 375.5. Over in the soybeans, we're up 8 1/4 for the August. September up 9 3/4, 867. And the November up 9 3/4 at 878.5. For the wheat, we got September up 5 1/2. July is up 3 1/2 for Chicago wheat. Kansas City September wheat right now is also higher over in Kansas City. The grain market for the wheat is up 3 1/2 at 544 1/4. July up 3 1/4 at 602 1/4. September Minneapolis wheat up 1 at 593 3/4. So the Minneapolis wheat market has turned around to the higher side, and July is up 1 1/4 at 637. And the December cotton contract is up 23 at 82.99. And to get analysis of just how much strength we can look for, let's go to the edge of the trading floor in Chicago at the CME Group. Scott Gecas joins us now. He is with Longleaf Trading. And Scott, it took a little bit here to gain a little bit of momentum out of the grains here, but looks like we might be able to go into the final few minutes here a little bit on the positive side, especially for Minneapolis wheat.
Yeah, and we're going to really see how that's going to play out. I mean, this move in corn and soybeans, it looks like it's just profit taking, a little short covering, a little bit overextended to the downside. But with the rain coming in with the 5-10-day forecast, if we do get as much as 2 inches of rain, it's going to improve crop conditions. In the soybeans in particular, we're looking for yields to break that 53 mark. If that happens, you're going to see a pullback on soybeans right off the bat. Going into the wheat market, Egypt is tendering 2 shipments, which is pretty decent. They're running about 30% below last year's pace, though. So that's pretty significant. You know, traders have the largest long position in wheat since 2012. Global output's declining. We're looking around that 530 as a support level in wheat.
Scott, all of these grains here today seem to be just kind of rebounding here just a little bit. What are you hearing on the trade floor? Is there the potential of this market continuing to firm, or if so, what would drive that?
For everything that we're looking at, the only thing that we're looking at that's going to move these markets higher is any deal out of NAFTA. Other than that, it's pretty much a perfect bearish storm on the way down.
All right. What about the weather market? You know, we just got the crop ratings in. Everything here, at least on the national basis, not too much of a change. It's the typical 1% drop for both of the row crops, both for corn and soybeans. Was the trade really looking for anything else?
I don't think so. Going into like I said, the 5-10-day forecast, if we can get that much rain, that's going to improve crop conditions, and it could drive the yields a little bit higher. So we're going to see how this next 5-10 days pan out.
All right. Thank you very much, Scott. Hang on the line with us. When we come back, we'll come back to you there at the edge of the trading floor and get your thoughts over here on the livestock side of the trade next, right here on the Market Day Report. In just a moment, we're going to answer the question as to how much trade volume there is over here in the protein complex. But first, let's get you up to date on the numbers. And we'll start over here in the live cattle pit. October is up 45 at 108.60. December fats are up 35 at 108.60. And December is up 35 at 112.35. Feeder cattle market, however, this has been a little bit interesting today with a two-sided trade. September feeder cattle up a nickel at 148.50. October down 30 at 148.65. And November at 149.02, breaking out of that 148 category. That's down 40 right now. Over in the hog market, though, this is where we see plus signs. October up 35, $52 even. December up 24 at 48.82. February up 63 at 55.28. Now, to answer that question about volume, let's turn to Scott Gecas, Longleaf Trading, there at the edge of the trading floor. Scott, can you kind of give us a feel for just how much volume there is in the protein complex?
Yeah, this is the perfect example of running into summer volume. There's just really not that much going on either way. So going into the last half of August, we expect volume to start coming back to the market as people are going back to school, people getting back on vacation or coming back from vacations. So we're going to see how that volume is really going to play out, but we're going to need volume to move this market one way or the other. Cattle market in particular, cash traded around 110, still running into the big supply concerns. Fourth quarter production is expected to be up about 225 million pounds, when usually in the fourth quarter it drops by about 125 million pounds. So that's pretty significant. Still those supply concerns. In the hog market, this is the one market that is really perplexing to me. You have news out of China that they ran into hand, foot, and mouth disease, and they slaughtered about 173 pigs. WH Group, they're the world's largest U.S. exporter of pork. They came out today and they said they're increasing pork to Japan, South Korea, as well as Mexico. So with those two things right there, I'm surprised that the hog market isn't up a little bit more than where we are right now.
Could it be that there's still a drag on the futures because of the cash side of the equation?
Yeah, it might be, but again, I mean, it's showing up. The demand is showing up, especially in the pork complex. And now that even with the tariffs, companies like WH exporting more pork than what they have been in the past. I mean, that's just showing up that the demand is slowly coming back. And again, everything is going to be all determined based on NAFTA. We get any type of deal with NAFTA, you're going to see that whole market spike really hard, really fast.
Even though the dollar is still going stronger and could make us maybe a little bit less competitive?
I think it might make us a little bit less competitive, but when you run into stories about hand, foot, and mouth and those type of things, demand is always going to be there for U.S. pork.
That's a good point. What are your thoughts over here on the dollar? We've been pushing higher. Now we're well above 96. Is 97 out of reach?
I don't think so. I think you're going to see the strength in the dollar continue, as well as the U.S. stock market continue to be stronger than the relative, other areas. With all the currency back and forth, especially with the Turkish lira. I mean, people are running to the U.S. dollar rather than gold, silver, and the bonds.
All right. Scott Gecas here with us. Thank you very much, Scott. We look forward to having you back tonight on the Rural Evening News. We'll talk to you then.